Right now, we're living through the biggest wealth shift of our generation, and hardly anyone is paying attention. The people who understand what's happening are quietly becoming millionaires, while everyone else hesitates. But the fact that you're watching this video tells me you are not like everyone else. Stay with me for the next few minutes, and I'll show you exactly how I would start investing in crypto from zero, even if I only had $50 to my name. Why crypto right now matters more than ever. Every once in a while, a breakthrough technology emerges that changes everything. But more importantly, it creates a moment in history where wealth doesn't just grow, it transfers. It moves from people who ignore the opportunity to people who understand it. From the fearful to the curious, from the misinformed to the prepared. Crypto is exactly that type of moment. I've been in this space for over 7 years, and I've watched crypto evolve from something only computer scientists and niche online communities talked about into one of the most transformative technologies in global finance. Crypto is no longer a side project or a hidden movement. It's becoming the backbone of future financial systems, and whether people want to admit it or not, it is here to stay. The craziest part is how early we still are. Even now, most people don't understand the basics. They don't know what a blockchain is, they don't understand why Bitcoin matters, and they assume crypto is too complicated to learn. But once someone explains it clearly, the light bulb turns on. And suddenly, investing in crypto becomes not just doable, but obvious. The purpose of this video is to give you that clarity. Everything I'm about to share comes from real-world experience and from the concepts explained in the beginner's crypto guide I referenced earlier. But I'm gonna break things down in plain English. No jargon, no overly technical explanations, just straight, practical knowledge that will help you build wealth. What you're about to learn includes what crypto actually is, why Bitcoin is so valuable, why Ethereum and Solana are shaping the future, what stablecoins are and why you'll use them often, how inflation is quietly destroying your savings, how to open crypto accounts safely, how to avoid losing money, how to research crypto projects, how to build a beginner-friendly portfolio, how to understand buying and selling, how to avoid scams, how to track your crypto like a pro, and how to think like a long-term investor rather than a gambler. By the end of this video, you will understand crypto on a level most people never reach. So let's jump in. Chapter 1, what crypto actually is. Let's start simple, because most people misunderstand the entire concept of crypto. Crypto is not gambling. Crypto is not fake money. Crypto is not just random numbers floating around the internet. Crypto is simply a system for storing and transferring value or information in a secure, transparent way without relying on a bank, a government, or a single company to manage it. This system is called the blockchain. Imagine a giant public scoreboard where every transaction is recorded. Everyone can see it, everyone can verify it, but no one can cheat it, erase it, or secretly change it. That's the blockchain. When people talk about crypto, they're usually referring to 3 main categories. Category 1, store of value, cryptocurrencies like Bitcoin. Bitcoin is the digital form of gold. In fact, it's better than gold in almost every way. Bitcoin protects you from inflation. Bitcoin protects you from government money printing. Bitcoin protects you from bank failures. Bitcoin protects you from currency debasement. Unlike the US dollar, which loses buying power every single year, Bitcoin has a hard limit of 21 million coins that will ever exist. Nobody can print more, nobody can change the supply. Nobody can manipulate it. It is the most secure, transparent, decentralized store of value humanity has ever created. Category 2, smart contract platforms like Ethereum and Solana. These platforms are the foundation of decentralized finance. If the internet digitized information, platforms like Ethereum and Solana digitize agreements, ownership, money, identity, and entire financial systems. Smart contracts allow developers to build everything from decentralized exchanges, lending and borrowing platforms, automated financial tools, games, insurance systems, voting systems, tokenized assets, identity management tools. This is why Ethereum and Solana are so important. They are not just coins, they are ecosystems where the next generation of technology is being built. Category 3, stablecoins like USDT and USDC. Stablecoins are simply digital dollars. Each one is designed to equal one actual US dollar. You'll use stablecoins to move money, store value temporarily, trade between coins, earn yield, avoid volatility. They're fast, convenient, and available 24/7, unlike banks. Now that you know the 3 categories, you already understand more than most beginners. But here's where things get interesting. Chapter 2, why crypto is one of the biggest investment opportunities ever. Let's talk about the financial system we live in right now. Your US dollars are losing value every year. Everything is getting more expensive. Housing is unaffordable. Groceries cost more. Healthcare costs more. College costs more. And your money sitting in a bank? It's slowly melting. According to the crypto guide I referenced earlier, the US dollar has already lost more than 97% of its purchasing power over the last century. That is not an accident. It's how the system is designed. The United States government prints more money every year, especially during economic crises. When more dollars enter circulation, the value of the dollars you already have decreases. It's simple, supply and demand. When the supply goes up, the value goes down. Meanwhile, Bitcoin has a fixed supply. That's why Bitcoin keeps rising long term while the dollar keeps weakening. Let's look at some numbers. In 2020 and 2021 alone, the United States printed a massive percentage of all US dollars in existence. The result? Inflation skyrocketed, prices surged, and the average American felt poorer. Bitcoin, meanwhile, surged in value. Because Bitcoin cannot be printed, diluted, or manipulated, it acts as a hedge against inflation. Why Bitcoin could reach $1 million. Let's compare Bitcoin to gold. Gold's market cap is about $15 trillion. Bitcoin's market cap is around $1.3 trillion. If Bitcoin reaches gold's market cap, each coin would be worth over $1 million. And even then, Bitcoin would still only represent a small portion of the global money supply. But Bitcoin is easier to store than gold. Bitcoin is easier to transport than gold. Bitcoin is easier to verify than gold. Bitcoin is harder to confiscate than gold. This is why many experts believe Bitcoin will surpass gold. Bitcoin is the strongest form of money ever invented, and we haven't even talked about Ethereum and Solana yet. Ethereum is becoming the settlement layer of the internet. Solana is becoming the fast, scalable alternative for consumer apps. Both are attracting massive investment, developers, and businesses. The upside is enormous. We are at the early stages of a worldwide shift in financial technology. Chapter 3. Important crypto terms every beginner must know. Before we go deeper, let's make sure you understand the basic terms. Exchange, a centralized platform where you buy, sell, and store crypto. Coinbase, Binance, and Kraken are examples. Decentralized exchange, a peer-to-peer platform where you trade crypto without a middleman. Examples include Uniswap and PancakeSwap. Market cap, the total value of a cryptocurrency. This tells you how big or small a project really is. Circulating supply, the number of coins currently in the market. Total supply, the maximum number of coins that will ever exist. Fully diluted valuation, FDV, the market cap if all coins were already in circulation. This helps you avoid projects that will flood the market with new tokens. Tokenomics? The economic design of a coin, how it's distributed, how the supply changes, what the token is used for. Bullish means upward trend or positive momentum. Bearish means downward trend or negative momentum. Once you understand these terms, crypto becomes much easier. Chapter 4, how to research crypto like a professional investor. Here's the most important rule. Never invest in a coin you don't understand. It's extremely easy to lose money by buying random coins based on hype, FOMO, or what influencers are pushing. But if you understand how to research projects properly, you'll avoid 95% of bad investments. Here's how professionals research crypto. Step 1. Use CoinMarketCap or CoinGecko. These websites show everything you need to know. Current price, market cap, circulating and total supply, charts, official website, white paper, social media links, community size, developer activity. These tools were emphasized heavily in the crypto guide I referenced because they give you the most important information in one place. Step 2, read the white paper. You don't need to understand everything. Just focus on the problem the project solves, whether the token actually has a purpose, how the team is distributing the tokens, whether the supply will inflate, the roadmap, and long-term potential. A good project solves a real problem. Step 3, check total value locked. DeFi Llama shows how much real money is locked into a blockchain or protocol. High TVL equals trust and adoption. Low TVL equals early or unproven. The crypto guide used TVL to identify undervalued opportunities between ecosystems like Base, BNB, Chain, and Solana. Step 4, compare to competitors. Ask yourself, is this project better, faster, cheaper, or more innovative? Is the community strong and active? Is the token undervalued relative to similar coins? Step 5, avoid coins with huge FDV. If a coin is valued at $100 million but has a $5 billion FDV, massive dilution is coming. Your investment will likely drop even if the project succeeds. Step 6, look for real utility. Does the token actually do something? Does the blockchain have real users? Is there developer activity? Is the project listed on major exchanges? These signals matter. Chapter 5, simple technical analysis for beginners. You don't need advanced trading strategies to succeed in crypto, but understanding a few basic tools will help you buy better and avoid emotional mistakes. Trend lines. If price makes higher highs and higher lows, the trend is bullish. If price makes lower highs and lower lows, the trend is bearish. That's all you need to know. Fibonacci retracement. This tool helps identify good dip buying opportunities. The most important level is 61.8%. Many large investors wait for that pullback before entering. Cost of mining Bitcoin. According to the crypto guide, the cost of mining Bitcoin has historically acted as a long-term bottom indicator. When Bitcoin's price gets near the mining cost, it often signals a strong buying opportunity. Terminal price. Another concept from the guide, when Bitcoin reaches its terminal price line, that has historically signaled the top of major cycles. These two indicators alone can simplify your entire investment strategy. Chapter 6, 2 ways to make money in crypto. Now that you understand how the crypto world works, let's talk about what everybody really wants to know, how to actually make money. There are only 2 real paths, and every strategy you will ever hear fits into one of them: long-term investing and short-term trading. Understanding the difference between these two and knowing which one is right for you is one of the most important decisions you will make on your crypto journey. Path A, long-term investing. This is the approach I recommend for beginners, and honestly, Even many experienced investors stick to this because it has proven to be the safest, most consistent way to build wealth in crypto. Long-term investing means holding assets like Bitcoin, Ethereum, and Solana for years, not days. It means you're not trying to outsmart the market every week. Instead, you trust the long-term trend of adoption, innovation, and scarcity. The formula is ridiculously simple. You buy quality assets. You hold them for longer than 1 year. You let time do the heavy lifting. That's it. That's the whole strategy. And despite how boring it sounds, this strategy has dramatically outperformed most day traders, most hedge funds, and most people who constantly jump in and out of the market. Let me give you a simple example. If you bought Bitcoin during a low period in any of its major cycles, 2013, 2017, or 2020, and simply held it until the next major cycle top, you would have made anywhere from 6 times your money up to 40 times your money, depending on your timing. And that's without being perfect. That's without being a genius. That's just from holding. The reason this works is because Bitcoin and Ethereum grow over time as the world adopts them. Think about it this way. Bitcoin started with 1 user. Now it has over 100 million. Ethereum started with a handful of developers. Now it powers an entire global financial ecosystem. When more people enter the system, the value rises. It's that simple. The crypto guide I referenced earlier showed portfolio examples and explained exactly how long-term holding has historically outperformed emotional decision-making and panic trading. And that's the point. Long-term investing removes emotion. You're no longer panicking at every dip. You're no longer chasing every pump. You're following a simple, proven plan. Path B, short-term trading. Let's talk about the second path, short-term trading. This is where people try to profit from daily or weekly price movements in the market. This path can be exciting, fast, and profitable, but it can also drain your wallet if you're not careful. Short-term trading requires a different mindset. You're not playing the long game, you're playing the price movement game. You're trying to enter a trade at a good point, ride a smaller wave, and exit with profit. The crypto guide included examples of traders using tools like Fibonacci retracements to enter after pullbacks, setting stop losses to manage risk, and using trend breakouts to identify momentum. For example, let's say a coin breaks upward from a trend line. A trader might wait for a pullback into the 61.8% Fibonacci zone, enter a position there, and then take profits when price returns to the previous high. But here's the truth. Beginners usually lose money trading because they skip one critical step: risk management. They enter too big. They chase green candles. They panic sell red candles. And they have no clear plan. If you want to become a trader, you must treat it like a skill. You must learn, you must practice, you must study, and most importantly, you must start small. But again, if you're a beginner, the safest path is long-term investing. Chapter 7, where to buy crypto safely. Now let's talk about something practical. Where should you actually buy crypto? This is one of the most important decisions you'll make because not all platforms are safe and not all platforms are designed for beginners. Here are the platforms I trust and recommend. Coinbase. Coinbase is the beginner's best friend. It is US regulated, extremely user-friendly, and one of the safest places to start your crypto journey. You connect your bank account, deposit funds, and buy crypto directly. It also supports stablecoins like USDT and USDC. The crypto guide referenced Coinbase as a primary fiat on-ramp because it's reliable, compliant, and widely trusted in the US file site turn 0, file 0. Bybit and BitGet. Once you understand the basics and want to explore trading, these platforms offer futures trading, leverage, advanced charting tools, and more flexibility. I don't recommend these for beginners, but if you want to learn trading later, these are excellent tools. MetaMask. MetaMask is your gateway into the decentralized world. It lets you interact with Ethereum-based applications, decentralized exchanges, NFT platforms, and more. You hold your own keys, which means you own your crypto directly. Phantom is the Solana ecosystem's equivalent to MetaMask. It is extremely fast, lightweight, and incredibly cheap to use. If you want to engage with the Solana ecosystem, gaming, DeFi, NFTs, Phantom is the wallet you'll love. Ledger Nano. Finally, the hardware wallet. If you're serious about long-term investing, you need to store your crypto on a ledger or another hardware wallet. This takes your crypto offline, making it nearly impossible for hackers to access. This is the gold standard for long-term security. Chapter 8, How to Build a Beginner-Friendly Portfolio. Portfolio building is where most beginners overcomplicate things. They try to buy dozens of coins, chase hype, diversify too much, or put too much money into risky altcoins. Instead, let me give you 3 simple portfolio structures from safest to riskiest that work for nearly everyone. Option A, super safe and simple. 70% Bitcoin, 30% Ethereum. This is the portfolio for someone who wants minimal risk and maximum long-term reliability. Bitcoin and Ethereum have the highest institutional trust, strongest adoption, and largest developer ecosystems. Option B, balanced portfolio. 50% Bitcoin, 30% Ethereum, 10% Solana, 10% high-quality altcoins. This portfolio gives you exposure to new technologies and emerging ecosystems without being reckless. Solana has become one of the strongest, most innovative chains. High-quality altcoins can provide stronger growth with manageable risk. Option C, aggressive growth portfolio. 40% Bitcoin, 25% Ethereum, 20% Solana, 10% emerging sectors like AI, gaming, or DeFi. 5% moonshots. This is the portfolio for investors who want higher upside and can handle more volatility. The small section of moonshots gives you the chance for extremely high returns, but only if you're willing to accept the risks. The power of DCA. Dollar cost averaging DCA is the simplest and most effective strategy for beginners. You choose a fixed amount, $10, $50, $100, and invest it every week or every month. You don't worry about price. You don't try to time the market. You stay consistent. This strategy smooths out volatility and builds wealth steadily over time. Chapter 9, How to Track Your Crypto Like a Pro. Most beginners lose track of their coins because crypto can become chaotic fast. You buy some coins on Coinbase, you trade some on Bybit, you stake some on Solana, you store some on a ledger, and suddenly you have no idea how much you even own. This is why you must track your portfolio. The Crypto Guide recommended using CoinMarketCap's portfolio tracker, where you manually enter the amount you bought, the price you paid, the date you bought, any fees, which wallet holds it. This gives you a complete picture of your total balance, your profit or loss, your cost basis, where your crypto is stored, your investment performance over time. This is crucial for taxes and for staying organized. Chapter 10, How to Avoid Losing Money in Crypto. Here's the hard truth. People don't usually lose money because crypto is bad. They lose money because they make emotional decisions, follow hype, and don't educate themselves. Here are the rules that protect you. Do not panic sell. Crypto is volatile. It is normal for Bitcoin or Ethereum to drop 20, 30, even 50%. Volatility is the price you pay for long-term upside. But holding strong during dips has historically been the most profitable approach. Avoid meme coins. They are fun, exciting, and can pump quickly, but almost all of them eventually crash. If you want to gamble with a tiny amount for fun, fine, but do not build your portfolio on meme coins. Never keep all your crypto on exchanges. Exchanges can freeze withdrawals, go offline, or get hacked. Store long-term holdings on hardware wallets. Avoid hype and FOMO. If the entire world is suddenly talking about a coin, you're probably too late. Buy during quiet periods. Accumulate when prices are boring. Avoid high leverage, especially as a beginner. Leverage multiplies risk more than it multiplies reward. A small move in the wrong direction can wipe out your entire account. Protect your seed phrase. Your seed phrase is the most important thing in crypto. If someone gets it, they own your money. If you lose it, your money is gone forever. Write it down, store it safely, never share it. Chapter 11, when to buy and when to sell. Timing the market isn't about prediction. It's about understanding patterns. When to buy. When Bitcoin approaches its mining cost, during fear and market downturns, during people's boredom, during long sideways accumulation periods, the Crypto Guide explained how Bitcoin's mining cost historically marks accumulation zones where long-term investors load up. When to sell. When Bitcoin approaches its terminal price, when everyone becomes extremely bullish, when the news is overwhelmingly positive, when your portfolio reaches life-changing amounts, you don't have to time the exact top or bottom, you just need a plan. Chapter 12, the mindset required to win. Crypto is not just numbers on a screen, it is a psychological game, and the people who win aren't the most intelligent, they're the most patient and disciplined. The winning mindset is built on 4 pillars. Patience. Most gains come from holding long enough for adoption to grow. Consistency. Small, regular investments outperform impulsive decisions. Education. Knowledge eliminates fear. Discipline. Following your plan keeps you from emotional mistakes. Chapter 13. Your action plan for the next 24 hours. Let's make this practical. Here is what you should do immediately. Create a Coinbase account, buy a small amount of Bitcoin or Ethereum, set up a weekly DCA plan. Start tracking your portfolio. Begin studying Ethereum, Solana, and DeFi. Set long-term goals, 3 to 10 years. Order a hardware wallet for long-term storage. Closing message. Your future starts now. If you've made it this far, you are not like the rest of the world. Most people never take the time to learn this. They scroll past opportunity. They ignore change. They stay stuck. But you didn't. You invested your time. You invested in your understanding. And now you have a clear roadmap to build wealth in the most powerful financial revolution since the creation of the internet. Crypto is here. The world is changing. And the decisions you make today will shape your future. Start small. Start simple. But start. Because 10 years from now, you do not want to say, I was there when everything changed and I hesitated. Your journey begins today.